Everybody. We're going to talk today about the Federal Reserve. We're going to talk a little bit about the structure of the Fed and monetary policy. I'm going to walk you through all of this. So it's going to be a lot. Buckle in. Feel free to take breaks. And then we're going to do a lot of playing around with this. But we are going to be just fine. We're going to be working with this over the next couple of weeks. So don't panic. All right, first thing I want you to understand is we talked about fiscal policy. Now we're talking about monetary policy. So, monetary policy is policy set by the Federal Reserve, and that's the central bank of the United States of America. The Federal Reserve controls the money supply of the United States. So, when I say the Federal Reserve controls the money supply of the U.S., what does that mean? Remember, the money supply is defined as M1. That means M0, cash and coin, and checkable deposits, the amount of money circulating in banks. So the Federal Reserve actually controls that money supply by limiting how much money can be out in circulation or on demand at any given time. And they do that mostly by buying and selling federal treasury bonds. So we'll talk about that in more depth. The Federal Reserve, I'm going to talk to you about structure and function of the Fed. You don't have to memorize these numbers, okay? But I do want you to understand generally how it's set up so you have a better feel for how it works. They are an extremely powerful body, and it's important that you understand sort of the background, but get relaxed because you don't have to know all of this. So the Federal Reserve is made up of the Board of Governors. Those are 7 members appointed by the President and approved by the Senate. They serve 14-year terms, and one term starts every 2 years. There's a chair of the board that's appointed by the president, and he serves or she serves a 4-year term. They start 1 year into a presidential term, so there's some continuity there. As presidents are elected, they don't immediately start changing the head of our money supply around. One of the things you'll notice about banking is it's a very conservative industry. They change very slowly, and the idea is not to sort of shock the system that sort of helps run all the commerce in our country. Here is a map taken off the Federal Reserve's website. So the Federal Reserve System is our central bank, but it's made up of 3 key entities. And that is the Board of Governors, the individual Federal Reserve banks that are part of our 12 Federal Reserve districts, and the Open Market Committee, which is a combination of the Board of Governors and some of the Federal Reserve Bank members. They have 5 key functions, and we'll talk through that here in a bit. All right, the chair of the Federal Reserve is Jerome Powell. He goes by Jay, and he's been the chair since 2018. The title was chairman until Janet Yellen was appointed in 2014. She was the first female chair, and she said, why gender it? So now it's just chair of the Fed. And Jerome Powell, if you've been watching the news lately, we're speaking to you in the middle of the coronavirus crisis. He's been on the news, and he's looking stressed. This is a difficult time for the economy. And good for us as we teach this because the Federal Reserve has been taking a lot of action that we'll be able to analyze. But typically an active Fed is not good for our economy in general, so not so good for the economy. The Board of Governors sets the reserve ratio. As of today, it's 10%, which makes the math easy. It sets the discount rate, and it makes up 7 of the 12 members of the Federal Open Market Committee. So they are the governing body of the Fed. However, even though the board is important, the district banks play an extremely important role in monitoring our economy and being part of the Federal Reserve's Open Market Committee. So you can see we have 12 districts across the country. These districts came about as part of the Panic of 1907, and you'll see I posted a video about how the Federal Reserve got its start, so you can take a look at that. But we are here in District 6, and the capital of District 6 is Atlanta. So part of the reason the Fed is particularly valuable to us is our state, and our state capital is home to the Federal Reserve's district bank. You can see it on 14th Street in Atlanta. They were rebuilding it while I was in college, and they spent a long time on the basement. You can go take a tour of the Federal Reserve if you wish. It's open to the public for tours, although the security is pretty tight. And one of the functions at the Federal Reserve of Atlanta is that they do stress tests on our cash. So they take dollar bills, see if they are able to be recirculated, wash them, and send them back out, or shred them and replace them with a shiny new dollar bill or 20 or whatever. As exciting as that is to handle money all day, you can imagine the smell of a bunch of crumply, wet, dirty dollar bills might be a little overpowering. There are 12 district banks in the Federal Reserve. So the bank presidents are determined by each bank's board of directors, and they're promoted from within the bank. So you will typically work your way up through the board. They keep the bank reserve deposits. So, for example, SunTrust, a regional bank, may have an office at the local Fed, and their required reserves will actually be kept in a savings account with that Fed. They process interbank checking and deposits, and only banks can be customers of the Federal Reserve. So you and I cannot have an account there, and that's important to note. The Federal Reserve is a banker's bank. Bank members sit on the Federal Open Market Committee. So 5 of the 12 members are bank presidents. New York always has a seat. Why? The stock market. So because New York's the center of our financial districts in our country, they have a consistent seat. The other 4 seats rotate on a 1-year basis. So Atlanta will serve a year, California district will serve a year, and so on. Here's Atlanta's bank president, Raphael Bostic. One thing that's really important to know is the Federal Reserve is an independent organization, and they don't depend on the federal government for their organizational funds. Now, they are backed by the federal government, so if they ran out of money and needed it, they could pull money from the Treasury. But because they are independent, they make their own money by buying and selling bonds on the open market, by charging fees to their member banks, and sometimes by charging fines. Wells Fargo was fined by the Federal Reserve due to some actions that they got in trouble for making accounts for customers that didn't want bank accounts. And so the Federal Reserve actually pays for itself. So that helps keep its independence. You can't get angry with them and cut their budget because they generate their own budget. All right, now's the time to kind of sit up, pay attention, get your pencils ready. The structure and functions of the Fed. All right, so the first thing they do is provide banking for the United States government. That means that they hold the account for the Treasury Department. So those two sort of go together. So when the Department of Defense needs a check for some battle tanks, they are going to ask for that, and the check will actually come from the Federal Reserve. That's the bank. Just like if you were to write a check, or if you have a parent who has checks, since we don't use them as much, your name will be on the check, but also the name of your bank. The Federal Reserve is the bank in this case. They buy and sell government securities. That's going to be a big part of what we talk about with our course. They issue paper currency. So they are the ones who control the supply of M0 in our country. That money goes out, even though it's printed at the Treasury or made at the Mint, it actually doesn't become official currency until it rolls through the Federal Reserve. And I'll post a video that helps show that. I know you're asking, well, what happens if it gets stolen? Well, there's traceable serial numbers and things, but beyond that, of course, that'd be different, although Federal Reserve security is extremely tight. They clear checks for banks. So what that means is if I were to travel outside of my Federal Reserve district, let's say I went to visit my friend Margaret in Seattle, and I write her a check for something. She'll take it to her bank in Washington. They'll take it to their Federal Reserve branch bank. That Federal Reserve branch bank will put money in her local bank, or put money in her local bank account, then ask my regional bank for money, so the Federal Reserve Bank of Atlanta, who will put money in their account, and then the Federal Reserve Bank of Atlanta will turn and pull that money from my account. So they actually handle that check clearing. That used to actually happen through airplanes. So they would fly checks back and forth across the country. The Federal Reserve handled all that. When planes were grounded after 9/11, they made a full move to electronic checking. Some checks are still sent cross country, but the vast majority are not. That, though, used to be a big deal. When you would drive from state to state, you would see signs that said no out-of-state checks because people would run checking scams pretty frequently. And you can see a good example of that. I usually show the movie clip in class, but the movie Catch Me If You Can, which if you haven't seen it, is a great film. So check it out. All right. They regulate the banking system. So the Federal Reserve, like I said earlier, they fined Wells Fargo for some violations of policy. they keep an eye on major banks, and they perform stress tests after 2009. They make sure that banks could handle it if they lost some loans due to some sort of economic meltdown, perhaps like the one we're experiencing now. So hopefully those stress tests will help banks to be better able to handle what we're dealing with now with the coronavirus. They are the lender of last resort to banks with financial difficulties. If your bank is going under, they can go to the Federal Reserve and borrow money from them. Now remember, the Federal Reserve regulates the banking system, so they'll keep an eye out, and those loans are going to typically come with conditions if they're happening too often or they seem to be failing stress tests, things like that. But they will always loan to their member banks, and that means that they're able to stay afloat and that the bank customers are able to keep money flowing. Finally, they regulate the money supply through the implementation of monetary policy. So we'll talk about that, and of course, that's why we're here. All right, so here are the 4 tools of the Federal Reserve: buying and selling securities on the open market. That means buying and selling bonds, and we're going to create a market to show what happens when each of these tools is put into place. Setting the discount rate, setting the reserve ratio, and interest on reserves and excess reserves. So let's talk about each of these in turn. So for starters, I'm going to talk about the banking side of this stuff.